What's going on, everybody? Welcome back to the Dips to Rips podcast. It is myself, Charles Moon. Howard will be with us soon, but we are with a legendary figure in the trading world, Mr. Scott Bauer. I'm not just saying that because he's my boss, but seriously, this guy is a legend. Right across the street at CBOE's where he kind of, what do we say, cut the jib?
Something like that.
Yeah. So Scott, if you could just give us a little brief breakdown about your bio and let us know who you really are and where you came from.
All right, so you know where I came from because we actually went to the same high school.
That is true.
Just a couple years apart. Charlie, you graduated like 10 years before me. Just kidding. But who am I really? I'm just, I'm someone that's been in this business for 30 years. I'd like to call myself an expert, a professional. Traded on the floor for 20 plus years before doing what we both do together now, trading on the screens and teaching people how to trade. I was partners in a big trading firm. Mm-hmm. I was a VP at Goldman Sachs and ran their S&P 500 operation for them at SIBO. And, this has been my entire adult life, entire professional life.
Yeah, professional is right. There's in terms of the background, Scott and I, like I said, went to the same high school, but I've always been, a trader behind the screen where Scott was actually in the pits. He showed me a picture of what, you're 18, 19 years old?
About 22.
22. He looked like he was 15 years old.
True.
I mean, honestly. But
I still do, don't I?
Yeah, okay. The Grays will...
There we go. Yeah.
But truth be told, he's a lifer in the industry. He's seen way more than a lot of the people out there. And, when we talk about him, actually being out there with the big boys, well, let's just say he was one of the big boys. But, enough about fluffing up Scott and how amazing he is. I want to get your thoughts about the CPI number that came out today. What we've talked about in recent podcasts between Howard and I was how this market has been relative to, inflation and the cause of concern. And then today the CPI data was just totally overshot expectations. And then we rallied.
Yep. So
why do you think we rallied today?
It's a really good question. I'm not really sure. But when we look at volatility across the board, it's just not moving. Mm-hmm. Everybody was waiting, myself included, maybe a month ago, 6 weeks ago, for that VIX to really top out at that 40 level. We never got there. 35-ish was the top a couple times. And now we've been sitting sideways in volatility in the VIX between 25 and 28 or so for what seems like forever. So why aren't we going lower? And that's a great question because, things are not good right now. But what that tells me is the market is maybe pricing in that we've reached that pinnacle. We've reached that peak, though we've said that for the last few prints because each print, I think, April, May, and June, have we reached the top? Have we reached the top? Mm-hmm. And we're still ticking up. The only positive that I make out of this last print is, yes, the headline number was large, over 9%.
Right.
When you strip out food and energy, that number was still large. I think it was 5.8 or 5.9%. But that is such a wide gap. And I'm not trying to make excuses for inflation, but this last number included when we saw oil trading 125, 130
much higher than
a barrel, much higher than it is right now. And that makes up a good part of CPI. So we may see that number come down dramatically in August. Now, what does that mean for trade? What does that mean for the markets? Well, we saw a big uptick in the probability of what the Fed is going to do.
Right.
75-point hike was pretty much priced in.
Right.
Now there's 50% chance of a 100 basis point or a 1% hike in July. And going further out, that September probability, which was likely to be 50, is now up at 75.
Right.
Personally, the Fed, in my opinion, I don't think the Fed needs to go 1%.
Right.
Because, and I've been on record saying this for the last month, 6 weeks, I think by the end of the year, or at least by first quarter next year, the Fed is going to overshoot the other way, and they're going to be pulling back rates.
Right. Not too many people have the opportunity of working with a mentor. I truly believe in Scott in being one of my strongest mentors. And we talk about guidance. This man here yesterday had said all of this to me before this data came out. And then at, about a half hour before the open said, this market is going to be looking up this morning. And sure enough, we have clients that have flown in. We're working with them hand in hand. He said that to them as well. And just like, the market was reading a script that he wrote, it happened exactly, like how he had suspected it was going to react. For me, I don't think we're at the bottom just yet, but I
agree.
I also think we're pretty darn close. I'm in that mode that I think we're pretty close. And, this is a guy that, Scott, is a guy that absolutely understands volatility. It's what he lives and breathes by. And, him talking about how volatility is dissipated, it's only, fortified by the fact that our daily ETFs for the SPY and Qs are dropping dramatically, and the daily ranges are basically getting shaved down by 30-40% here. So this is kind of that calm before the storm. Part of it could be that September basis, September increase of rate hike. A lot of people suspected that the Fed was going to start rolling back there, and that's when the markets were really going to start strengthening. That kind of muddies the picture, but I think by the end of it, especially towards the end of the year, we may have seen the peak. And if we have seen the peak, this market is or has or already is priced in that, kind of downside aspect. And I think the driver in the near term to the downside could be earnings, but then that's also going to be a sufficient reason for buying in on the dip, right? If the ever so rising rates are starting to stem, and Bullard said something really interesting. I think earlier this week or last week, that the Fed could even start lowering rates once things are kind of calling for it. So, we went from a guy being super hawkish to being super dovish in a sense. And it's like, all right, we'll have to wait and see. Scott, I know you got to get going, but I guess relatively speaking, if you had any advice for newer traders that are trying to learn how to trade or adapt to this environment, what would you, I certainly can't, individually give someone advice, but broadly speaking, what do you think their approach or their thought process should be trying to learn under this environment?
So it's really interesting, Charlie, because, we haven't seen a bear market in a long time. We haven't seen this environment in a long time.
Right.
So a good number of the traders, the new traders that are out there trading now, have never, ever seen this type of environment.
Right.
They only know stocks go up, buy the dips when they sell off, and that's not this environment. So my advice to anyone, not just new trader, but anybody in this environment, if you were historically looking for 50% gains, look for 25 or 30% gains.
Yeah.
If you were looking to get stopped out 30, 40% on the loss side, look to get stopped out 20, 25%. This is a time, guys, when there is so much uncertainty and when fundamentals of the market almost don't make sense with how the market is trading.
Yeah.
You just keep things really close to the vest. And we'll get out of this. It may take a quarter, 2 quarters, 3 quarters. We'll get out of this, but not a time to be a hero.
That's exactly how you should approach this market. Scott, thank you for your time, brother.
Always a pleasure, man. Love you.
Hey, you're not Scott.
I am not Scott.
All right, so we have replaced Scott with the other host of this podcast, the legendary Howard Greenberg. It's good to have you back. He was just downstairs with the clients, just hanging out and having a good time, of course.
Absolutely.
But, today was an interesting development. We just got Scott's take about the CPI, and, we've seen the effect on the stock market. We saw the effect, obviously, with crypto.
Right.
And, you and I both were pretty active early. And
Absolutely.
We were actually leveraged short, okay, to the downside. I don't want to say leverage in a negative way, but we were short to the downside. We were kind of in this wait and see mode. We both closed out for profit, and then we ripped it right into the upside. And then I think I saw late in the day you took a short. Is that correct?
I did. I shorted Dot.
My man.
Shorted Dot at the end of the day. Like you said, you and I both had the same philosophy.
Yeah. I shorted
the market,
Amazon at the end of the day.
Yeah. So, we watched it. It was dip to rip today, though. It wasn't what we were expecting, but we were ready for it. And I could hear you yelling in the other room. I was yelling at the same time. We got out of our shorts really nicely and moved right into a long on sand and on Cosmos. Rode those up, took partial profits already today. And now back to the downside with DOT, which we rode down yesterday.
Yeah.
It caught fire today, and I think it dies tonight.
This is a newer side of Howard, so to speak, being a little bit more. I don't want to say not being more aggressive, but being more aggressive for the short-term idea.
Right.
And it's like once the dust settles, what's going to happen? And when there's a little bit more clarity, this is really where traders tend to shine. Because without clarity, it obviously becomes somewhat of a casino. It could flip up, it could flip down. Sometimes it does both, and it can happen in a matter of minutes. But those aren't really pockets that we were really looking for. We love volatility, but we love clarity. And I think that's kind of the approach, and probably why we fit so well, because the thesis, the opportunity, and the attitude is very similar between you and I. Absolutely. Even though I'm Asian and
I'm Jewish.
Yeah, right. But in the same sense, it's the same thing. We both look for opportunity.
Absolutely. Right? Yeah, you got to play the market in front of you. I'm not looking to make the market. I'm not Scott Bauer.
Listen, we don't think trade, right?
Yeah.
That's an important saying.
We were talking today with the students that are here for the fly-in. One of the biggest learning things that I think they got is trader mentality as opposed to investor mentality. And like you said, I've definitely adjusted mine much more like yours into a trader mentality.
I love it.
I was more playing, just waiting for longs. Now we're playing the short side too.
I love it.
And we're playing it at 3x because that's what KuCoin has available for me.
And I know that you've had some. I don't want to say some feelings. It's not like you're adverse to shorting, but it's also, we got to be careful about when we offer up these ideas, what kind of risks that clients do take on. And
Absolutely.
We certainly want to make sure that's understood, that there's going to be an opportunity to be short, but it's not without risk. Certainly it's not without risk. You can only short on margin. So just keep that in mind, folks, if you are doing that route. So let's just say this. I don't know if you have a specific game plan going into this weekend, but I just want to kind of break down where, I'm not a man of trying to predict the future or timing, but I see how things could play out. And I think tomorrow is going to be interesting at the open and how it plays out. But I'm actually thinking Friday could be very, very bearish for the stock market. And I don't know how you feel about it.
I feel that in general, what we're seeing is volume just dropped off today, man. Did you see that right after the bottom? I mean, we could have gone to sleep after 10 a.m. I mean, it's our trades were basically done first thing in the morning.
Yeah.
And then the last 20 minutes of the day, the only thing I did was pull a couple of partial exits in between. But that's what I think we're seeing. I think volume's dropping off. Derivative trading market, even in crypto, dropped off. We usually see about 100 billion a day in volume. We were down at 70. It doesn't sound like a lot, but that's 30% down.
Oh, that's 30 billion. That's a lot,
people, but people just look at 170 like, oh, it's not that bad. They think about their test scores. Don't look at it like your test score. It's not a good grade.
It's interesting you say that. Today was actually the highest volume traded day in the SPY and the Qs. But just like you had said, a great portion of that was done in the first 2 trading hours of this session. And it doesn't really say much because we were, I think in the SPY, 40% off our average yesterday. We were nearly like 33% in the Qs. And the prior day, we were kind of in that same threshold as well. So we basically traded what our 20-day average was in the ETFs. And, that's another thing. We can't force these opportunities. The opportunities do have to be prime, and the volume does have to kind of help validate that. For those that have worked with Howard, he's a big believer in introductory volume and liquidation volume. He has, a lot of data points that he looks at. The first time I met you, or spoke with you, you showed me your that little wave bubble chart of the volume spout, which I thought was one of the coolest metrics and the coolest heat maps that I've ever seen, because it's specifically attributed to recognizing what he looks for, which is whale volume or strong retail demand. And you know, that's always going to be a driving force in every upside, downside kind of play. And seeing that drop off, Howard, are you a bit worried or concerned that A, we're going to go nowhere, or B, that we're getting a lot of false flags in terms of
Well,
signals?
I mean, you and I both have had the same philosophy, I think. This was a relief rally. And you told us, and you really got me ready for it, that we're going to see some rips, man, that you see some of the biggest days increases during the bear market, not the bull market.
That is true.
You know, and that's what we saw. We saw a relief rally. You know, Bitcoin for me is obviously the big dog you're watching. You know, once it broke, and I said if it breaks 20,500, it's running to 22.5. I got within like $20 of that call, and within a day, and then it dropped. As soon as it dropped, I said we're going right back to 2050. As soon as we got close to 2050, we go below. We're going back to 19 or 18. We went right back there. So you know, you're starting to see the patterns. You're starting to see the levels where you can start to make your moves. They're becoming more apparent. It's almost like that 20,500 for me becomes the VWAP.
Yeah.
You get above that, it's go time.
Yeah.
You know, that's the same thing. And when we drop back below it, the same way.
Yeah, and you know, there may be people that are new to the podcast or just new to trading and kind of the lingo. When we talk about these price levels, they're generally thresholds that the market looks at. And we could see sentiment turn very quickly once we see, you know, whether it's Bitcoin or Apple above these levels, these pricing levels of threshold. A lot of that is attributed to past history. And, you know, traders, you know, not just ourselves, but obviously globally, we'll be looking at these levels as well.
That's you nailed it, because fear and greed, as soon as we went under 20,000, we had finally climbed up out of the single digits into 20, 24. As soon as we went back below 20,000 Bitcoin, it went right back under 20 on the fear and greed. So you could see that flow like you're saying. People, you know, right now it's those little wins, makes everybody euphoric. We get that nice little bump off of that. But it only lasts so long because the market makers aren't ready to take us back up yet. You know,
I did say, and we said it in the podcast last time, that I think that the bottom is starting to get close. And I asked you about that with crypto. Has anything changed in terms of your assessment?
The thing that got released is that Mt. Gox's redistribution or you know, retribution plan is getting approved, the final approval. For those that don't know, Mt. Gox was by far the largest exchange.
It was.
Back in the 2011 to 2014 period. It would be the equivalent of Coinbase. It got hacked. You know, millions and now billions of dollars worth of Bitcoin was lost. And they had, you know, held a good portion of Bitcoin, and that now has gotten to such a price that they're now able to pay everybody back in full for the value that they lost. But when those people lost control of their Bitcoin, it was at $200.
Yeah.
So they're going to get ready to sell. So we have in my opinion, we have a huge capitulation event from that available, and I've already talked about the miners, and that hasn't changed yet. But that's the big one, is that is really the big one to worry about Mt. Gox, because there's a hedge fund Fortress. They purchased a huge amount of those claims from people. And even when they purchased those claims to the BitGox, you know, money, they did it at under $1,300. So, you know, you don't think those hedgies want their money back?
Is there a possibility that they're going to hold strong and long?
I think that they've got enough crypto holdings. I don't think you hold this. I think, in other words, if I had to guess, if I had to guess, it was a couple of guys at Fortress that said, "Hey, let's see if we can buy some of this stuff up for pennies." And they were paying somewhere between 60% to 80% of the value of Bitcoin at that day. You know, and I think people sold. I think they looked at that as an investment. You know what I mean? It wasn't part of their thesis, their investment thesis. This is a corporate decision. I'm buying this Bitcoin at 60 to 80 cents on the dollar, knowing that it's going to take a year, 2 years, and it's taken, you know, 5 years maybe since they started doing this. I think they started in 2017 buying up these warrants. You know, they're going to want to cash out, in my opinion.
Okay, so say that does happen. Say they do dump on the market, and the market actually holds strong. Yeah, we didn't break that recent low, and we got near it, but we just see the relative demand coming in. Would that change your thesis on a possible rally coming in?
Oh yeah, absolutely. I mean,
we survived the event?
we survived this morning. I mean, this morning, you know, we dropped to a little bit below 19.
Oh, it could have been ugly,
and it went straight up.
Yeah.
I mean, you know, that was what we want to see. You know, we saw that bounce. It wasn't a drop, sideways move,
Right,
and then
right,
sort of
right.
recover as
No, it was
Michael
spiked
Saylor
up.
and somebody else decide for big buys. This was a whole bunch of people that have been listening up and realize anything under 20 is a deal.
It sure is.
Yeah,
I mean,
and
I
as soon
agree
as
with
it
you.
said, and what I said to you, TJ Maxx shoppers. Right now, we're seeing lots of people in there that
Why
are
you gotta call me a TJ Maxx shopper, man?
because I'm looking at your outfit.
Look, hey,
I'm just kidding,
this is
man.
a nice
I
Nike
know.
polo. Okay,
But you know what I mean is that and when I say that, what I mean is, we were trading at 20,500, and there was a ton of buy orders being put in at 19K.
Yeah.
Just waiting for that crash.
So you definitely saw that.
Huge amount.
So you saw the and you know what? I just want to say this. It's not like this is the first time Howard's talked about, bargain shopping for BTC under 20 and, Ethereum under 1,000. And since he said that, we haven't revisited those levels. In fact, we've been doing our best to hold the 1,000 mark and the 20,000 mark. Yeah. And that's always a great sign, right? We kind of saw that around that 40 mark and then the 30-ish mark. But this is a little bit different because we didn't test those levels. We just kind of held, propped up, and then rolled over.
Right.
And so this told me that overall the market dynamics are changing. This is telling me the same thing because this data point, the CPI, while we didn't open, pretty, we certainly finished a lot better than we were. And if you kind of relate this to where we were on the last CPI report, we spilled about 10% in 3 days in the NASDAQ. So we're starting to see the market dynamics change. Now, maybe it's because of the lower volatility environment, that is summertime trading and big money's out there spending the billions that they made in the first 2 quarters. Who knows? But these are like little nuances that you and I are starting to notice. And that while we're having this podcast, is to really kind of make people informed, because I think what we used to say a lot, but it's not said as much, is that there's traders and then there's informed traders, and informed traders tend to have that edge because they see these little nuances, they see these differences, and these differences can make a difference obviously in your returns. The earlier you get in on your trades, the more reward you're going to have. Yep. And if you're constantly going to be chasing after the market, what do they say with dogs that are constantly chasing cars in traffic? Well, eventually they're going to, face the wrong truck, and the outcome's not going to be pretty. And that's kind of the same thing that we're always trying to get our listeners and our clients always informed. Students are students because they want to learn. Not all students, but most of the people that we work with want to learn. They want to better themselves. And I think that you, my man, are doing a great service for that. How are you enjoying Chicago so far, brother?
Love it, man. Having a good time. And you gave me the best food recommendation in a while.
Yeah, man.
Charlie tells you to get a hamburger at Au Cheval. You go to Au Cheval.
Listen, I know
you get a burger.
I know something about burgers, man.
It was top 5, and I've got a couple of really good friends that are amazing burger chefs. One guy that has about 20 stores, another guy that has about 6 or 7, known for burgers. This was right up there. This was unbelievable. It really was.
We know him as Crypto Hondo, but really it's almost like Chef Hondo. This is a guy that definitely knows the industry extremely well. He's a foodie himself. Do you love Bourdain?
Oh yeah.
See, you and I, okay. So we love Bourdain, and it's kind of that open up your eyes, open up your mind to trying different foods. You know it. I know it, and it's high praise coming from you. Talking about Au Cheval.
It was.
And you know how busy it was. You went at the right time.
Yeah, luckily I had a hookup that got me in there at 9:30 at night.
Sorry, I don't have that hookup. Howard comes from a different town and has a hookup in my city.
But yeah, they turned around 50 people or so while I was sitting there.
Easy.
And said we have no more reservations tonight.
Come at 7 o'clock and wait till you see the line.
And that's just I said, well, I told you guys we need to open up our own restaurant called South Cheval about 3 doors down because there was some vacancies. But you can see, it was one of those restaurants. They do one thing and they just do it right. A burger. I don't want to know what the calorie intake was, but it was delicious.
It's enough to have you survive for the next 5 days if you need.
And just everybody there was amazing. Service was amazing. The host, he said the pro tip, and just so you know, and now I know that with all burgers, if you get an egg on a burger, don't cut the egg, cut some slits in the burger. So when you put the egg on and you crush it, it goes right through the burger.
Yeah.
Pro tip.
Pro tip, guys. There you go. Now I'm hungry. Let me get back on track here. Well, having Howard in town has been a great experience. Like he's working in the office next to mine. Prosper gives me my own office, not because I deserve it or I'm the bigwig. It's just because I'm the loudest. We got to make sure.
I will say that.
Yeah, I am the loudest. I do love to scream. I do love to call out the stocks, but it's really good to have Howard this close. And, it's a lot different when he comes into the office or I come into the office and we bounce around ideas because, Howard and I do communicate throughout the day. We're sharing articles. We're always looking at things. We're always processing information. And I think having you here has offered up a lot more clarity. And, some of the things that you send to me, I read it, but, it's like out of my world. Right. And I don't understand it. But when I hear you talk about it and hear you directly, like this podcast, it really, really helps me out. So, man, my man.
I appreciate the same thing. I was going to say is I do see why Goldman Sachs and some of these banks do want their people back in the office when it comes to trading. Yeah. The ideas that I've gotten from you and Mike and Scott over the last couple of days, just by us getting in the morning going, what do you see? One person gets you and gives you one little tidbit, and then you start going down that rabbit hole and, really finding out the answers.
I feel really good. I've definitely been seeing the markets a lot better. I just told the room today that the first, this Prosper probably doesn't want to say this, but I had the worst first quarter of my trading career this year. And it was probably because I was a bit stubborn. I know I was a bit stubborn. My expectations with the market environment, was really consistently up. It wasn't that I was afraid of shorting. I actually love shorting. Just that I didn't have the conviction in it because the market was always bouncing back so strongly. Once I really kind of got out of my own head and really saw with clarity, my trading is absolutely turned around, and I'm having actually one of the best quarters that I've ever had. And this tells me more than anything, and really helped me provide a lot of guidance for my students. One, respectfully, the psychological aspect, which is where I'm taking this into, but more importantly, is that I certainly am in a position where I'm never going to give up. Am I going to be frustrated? Howard could probably attribute to me being one of the most emotional guys that he'll ever meet, but I never let that emotion leak into my trading whatsoever. No. And I know that a lot of people are still very fearful, still very concerned. But when I was talking with Scott earlier, him and I both agree that the market has priced in a lot of this bad like news. And so, when we think about it from an emotional standpoint, a psychological standpoint, how do you think that, and I hate to say this, but it's probably a lot more negative for your environment than it is for mine. Do you think that that's kind of starting to turn the tide, or do you think that it's kind of still lingering?
Still lingering. It hasn't changed yet on crypto. There's still bad news contagion, still little by little seeping out. It doesn't help the Three Arrows Capital hiding from everybody, and
they are.
And then if they do come out, they point fingers at people and say we've been threatened, and everything else. You lost billions of dollars. You put people at risk of losing everything they own. They're going to be mad people. Now I don't think violence is the answer, but you got to expect that. I mean, and what we haven't seen that turn around. What I would say, and I think that I saw you do in your trading, and that I then followed, is our expectations before might have been I'm not going to take my first profit until approximately 15%. And maybe I was looking for trades. And again, when I say that, we don't decide our profits based on a percentage. We decide whether to enter the trade if that percentage is there. Right. At least that's how I look at it.
Right.
You know what I mean? Right. And I've been willing to, I'll see where I think it's got 15, and I everything's showing me 15. As soon as we start getting to 10, though, if it gets a little shaky, I'm not afraid to take that profit. And I know you've done the same thing. Yeah. And that's a difference, I think, for both of us, and something that I see then that gives confidence to people in my room. Then they're ready to go. Now all of a sudden, where at the beginning, after a couple of bad months, like you're saying, not as many people jumping in the trades. Now I have more and more people more active asking, hey, what are we doing next? What's going on? Because they're getting these little wins is, you don't think that you're going to make a home run next time.
Right.
But let's make sure we're hitting singles and doubles every time. And they add up. You score a lot of runs from singles and doubles. The St. Louis Cardinals made a living of that for years, right?
Screw them.
It's not always the Bash brothers.
Screw them.
Oh, I forgot. Yeah, you're a Chicago guy. See, I always say that. I use St. Louis as a reference because then they don't mean anything to the Red Sox. But so.
Diehard Cubs fan, diehard
Red Sox fan.
Yeah. So, it's interesting for me how things are starting to develop. I think that we're kind of hitting this key point where if the emotional state around the crypto environment transitions, that this is where we can start anticipating the home runs. But, chock full of sayings, one of them that I preach a lot is adapt or die. It's that you gotta adapt to the environment, and the sooner the better. And once you become stubborn about that, things change. We've been in this bull market nonstop since 2009, basically, with one little black swan event, which no one could foresee. And now, finally, in 2022, the realization of our reality, right, which is the outside world with, our actual economy and the actual fiat and the inflation of the fiat. And, it hit the markets, it hit investors, it hit shareholders, and it hit like a pallet of bricks falling from a
ton of bricks. Yeah.
They call it Willis Tower, but I refuse. It's Sears Tower.
Sears Tower.
If you're a Chicagoan, if you're old school, you call it a Sears Tower. And it ended up hitting that. It ended up hitting investors, traders, and the markets. And here we are now. And the question is, are those bricks, do they break? Can we build up from these bricks? The answer is absolutely yes. And I think once we start seeing your market start really livening up, it's only going to further validate that upside in the stock market as well. I wanted to touch up really quickly on the BlockFi news. I shared that article with you, and you said that that's actually pretty good. I think it was BlockFi, right, with Grayscale, or was that wrong?
Oh, yeah. They're not going to. Yeah.
They're not going to be working with Grayscale anymore.
What it is so they stopped taking Grayscale's GBTC as collateral for loans.
As collateral, thank you.
And a smart move is, what we're finding is what was considered to be sort of risk-free, in the fact that eventually
risk-free
in the fact that you'd be able to sell that Bitcoin for what everybody else was paying for it.
Right.
And there's a premium or a negative premium that gets done because it's a trust. It's hard to explain. It's a closed-end trust.
Sure.
So it means every Bitcoin that they bought, they can't sell.
Right.
So the price moves based upon the price of Bitcoin, but it also moves on the supply and demand for that GBTC.
Of course.
It's actually trading at 30% discount to the actual value of the assets they hold.
Right.
And the problem is that, the idea is they won't be able to redeem that necessarily today, tomorrow, whatever. Mm-hmm. And that was putting a lot of stresses on their liquidity that you don't need to put.
Right.
The same way you've seen with Lido and that staked ETH is, again, 3 Hours Capital and Celsius, they had huge exposure to staked ETH. And what it was is these are coins that they own, but they're locked up until the beacon chain is completed.
Right.
And that staking period is unlocked. And that might not happen for another 12 months. So sure, they have $435 million worth of staked ETH, but it's not truly liquid. And that's trading at like a 6% discount versus the underlying value. And that's where you really get into trouble, is that you have these assets that are depreciating at a higher rate than the actual underlying asset is.
Right.
So getting that out of the system, smart, in my opinion.
Smart for BlockFi.
Yep, smart for BlockFi.
And there's been issues and talks about, liquidity issues directly with BlockFi.
Right.
We've heard it with KuCoin. I've heard Kraken as well.
Yeah.
I don't know if you heard the rumors on Kraken, but
I
there's
don't like to
concerns
even really
floating.
get too much into them because too many are proof false. As you know, I use KuCoin a
Right.
lot. I haven't had any problems with deposits or withdrawals. Their CEO made it very clear they had no connection to Three Arrows Capital. You know, all these fake rumors went out on
And that's
all
the
these.
industry.
Yeah, and it is the industry, and what it is everybody wants to be the next guy to prove it. And the first person that put that out was this anonymous account, had nothing to do with anything. And, some of it isn't there. Sometimes where there's smoke, there's fire, but there wasn't even any smoke. Everything that they were saying made no sense. I sent you that thing. The first thing they sent showed that the problem is that the liquidity that was being held by USDC Circle was being lent out using Signature Bank and Signet.
Yeah.
And they're not even their bank. BNY Mellon is their bank. It's
Yeah,
very
it is.
well known, and everybody knows that.
They're registered.
So that's where this stuff starts. That's where I started to see these
Right.
disconnections. Is like, wait a second, that's not even the banks that Circle use. You're trying to say Circle's not that. Not only that, but one of the large 10 accounting firms gives an attestation report every month that shows that Circle holds all the client funds in either dollars or short-term U.S. Treasuries. They don't do any lending, any borrowing. They're a fully reserved holding company.
Right.
And that's where a lot of this stuff came out.
So don't listen to the static, guys.
Yeah,
Listen
don't
to
believe the
Howard.
hype. Don't
My
believe the
man
hype.
knows. We'll wrap this up shortly, but one last thing. I saw it being shared. It supposedly came from the terminal. I thought it was extremely interesting. There's a new inverse ETF, a bear ETF on Tesla.
I saw that.
Yeah. So on Twitter, for folks that don't know what a lot of the non-believers, the fade the Musk, where I say never fade the Musk, but the people that hate on Tesla, the people that hate on Elon Musk, Staffel Capital is the most popular one that I know of. They always end their tweets with hashtag TeslaQ, the ticker TSLA, and then the letter Q. So it's a 5-letter ticker. Well, it turns out that this inverse bear ETF, or this inverse ETF to Tesla, the ticker symbol is going to be TSLQ. So we'll see if it's true for one. If it is, it's going to be online tomorrow. That's what they're saying. And by the time the podcast is out, it's probably going to be trending, or there'll be some sort of news on it. But I find it interesting that that a firm wants to take an inverse play directly on a stock, one that's split, but it's still a bit hard to borrow. And two, we've seen these inverse ETFs come out, like SARK, which is the inverse to the ARK, but it's a basket of stocks. So
that's what I was going to ask you. I was going to ask you. So that was where I thought it might be some false info, because would that even make sense?
So with these premiums being, $45 per contract for a weekly expiry, it makes a lot of sense that there's demand for something like this. Usually ETFs will be created based on demand, right? That usually comes, we talk about BlackRock and Vanguard, we're not talking about those types of ETFs. We're talking about something like SARK, for example, where they were created. Just like option markets are created based on demand. So there had to have been enough demand. There had to have been a lot of people with money. They're like, this is ridiculous. We got to find a better way of capitalizing on this. And, these firms that are making these ETFs, quite honestly, they don't really care about maybe the asset itself. They care about the incoming money.
Absolutely. I was just about to say something. I think so here's a question for you. You just said something important. The institutions don't care how expensive it is. They can buy it. What they want is the retail, what they call the dumb money, to be able to come in so that they can clean out the dumb money.
Yeah. I mean, listen, Tesla Q has trended for years.
Yeah?
How many people have tried to short? What Mr. Chanos?
Right.
I think Einhorn shorted. How did that work out for them?
Not very well.
I think Chanos went 1 for 4. He made a killing. He made a killing shortly after the 420 going private tweet.
Right.
And then he reshorted, or he leveraged and got totally destroyed. And then he went on TV and cried about it. Einhorn did the same thing. And certainly there's going to be a time and a moment where Tesla will work its way lower. The problem is sometimes these hedge fund managers, these good old stock pickers, They're no better than the rest of us, where
absolutely.
we just hold on to things too long.
Or they get too loyal. You know what I mean? As they
get too stubborn.
Yeah, well, yeah, that's a big one.
Yeah, that's the human mentality, the human emotion aspect when it comes to trading is such an important component. We could learn all these fancy lines and how charts look and chart patterns, etc. But when it comes down to it, it's the person clicking on the mouse, clicking on these keyboards that are making this decision. And then it's the same thing when we enter as well as exit. It's up to that person. And when we start overthinking things, or we kind of talk ourselves into being stubborn, we basically start saying, well, we're trying to supplement our excuse for either not taking a loss or not taking our profits. That's when people get really in trouble.
Absolutely.
When the number one question that I get, I don't know about you, but the number one question I tend to get from people is never about when should I buy. It's when should I take profits? How do I know where to take profits? How do I know to cut a loss? They don't know. It's always these extremes. They hold on way too long, both for their winners and their losers. And that's really the detriment. When people could kind of let it go a little bit quicker, that do well, they're kind of in their own world and they're fine. But it's like everybody thinks that they should be able to buy the bottom, sell the top, short the top, and buy back at the bottom, and that's just not how it works.
You and I've talked about that. Only one person buys the top, and only one person can buy the bottom.
Yeah.
Everybody else is just ratios thereof.
Yeah, and I always remind people and think of in the realm of threes: leg, body, head. Right? The pros usually it's the big money. They're buying at the feet. The pros are usually buying from the hip, in the torso, from the hip to the shoulder. It's the uninformed or the emotional trader that buys at the head.
Right.
And sure enough, how many times does that happen where it rolled,
Yeah.
So be a torso buyer, guys, the body buyer.
I always say it is bears eat, bulls eat, pigs get slaughtered.
Yeah, well, sounds like Scott. There may be something to that guy.
Does he say
tons. There may be something to that, ladies and gentlemen. So we're gonna wrap this up. My man, great seeing you.
It's great seeing you, man.
The legend, Howard Greenberg, guys.
And disciple a trend there.
This is an important moment for our podcast. We're doing it live. Hopefully you guys loved it. If you did, click that like button, share. Make sure you're also hitting that notification button so you're alerted whenever we drop these. We usually film them on Wednesdays, try to get them out by Friday. Our man, Michael Clark, behind the scenes, does an amazing job. He makes us look good. That's tough
to do.
You got that right.
It's a full-time job.
But yeah, follow us on our socials. What's your social?
Crypto Hondo.
Crypto Hondo, Disciple of Trend on Twitter. Click that like button. Share with your friends. Get us viral. Peace and love, everybody.
See you next week.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.